makes you doubt it. You start thinking, what if the news changes? What if this analyst is right? What if I'm missing something? Before you know it, you've talked yourself out of the trade. The noise didn't just distract you. It stole your conviction. Most traders think more information means more control. But in markets, the opposite is true. The more opinions you absorb, the less clear your judgment becomes. Every trader should have a filter, a mental gatekeeper, that asks one question before reacting to anything. Does this align with my system? If the answer is no, discard it. It doesn't matter how loud it sounds or how many people believe it. The market rewards clarity, not confusion. I've seen traders with 10 screens and 20 indicators thinking they're increasing their edge, but all they're doing is cluttering their mind. Every indicator tells a slightly different story, and when those stories don't match, you freeze. The truth is, you only need a few reliable tools, maybe price action, volume, and one or two signals you truly understand. Strip it down to the essentials. Once you simplify your charts, you'll be amazed how much easier it becomes to see the truth of the market. Ask yourself this: how much of what you look at every day actually helps you make a decision? Be honest. How many times have you stared at a chart waiting for confirmation that never comes because you're looking at too many conflicting signals? That's the poison of noise. It makes you feel active while accomplishing nothing. A disciplined trader cuts it away like a surgeon. Anything that doesn't contribute directly to better decisions is eliminated. Noise doesn't just come from charts or screens. It comes from people. Friends, chat rooms, headlines, social media. Every voice wants to tell you what the market should do, but none of them will pay for your losses. The crowd will cheer when prices rise and panic when they fall. And if you listen too closely, you'll do the same. That's how most traders get caught buying tops and selling bottoms. The noise of the crowd is seductive because it gives the illusion of safety. You think, F everyone's doing it. Maybe they know something I don't. But that's exactly when you should step back. The market punishes comfort. The best trades always feel uncomfortable because you're acting before the crowd, not with it. When you cut the noise, you begin to notice patterns that others miss. You start to see how price reacts to levels, how volume behaves before a breakout, how trends mature before reversing. These are the real clues that lead to consistent profits. But you can't see them if you're buried under a pile of opinions and data. Simplicity creates focus, and focus reveals opportunity. It's the same reason why professional traders often look calm, even during volatility. They aren't calm because they know the future. They're calm because they know what to ignore. They've already filtered the noise before the trading day begins. They're not reacting to every candle. They're waiting for their exact signal to appear. You can only achieve that kind of composure when you've built a rule around what matters and what doesn't. I'll tell you something from experience. The hardest noise to silence is your own. The voice inside your head that says, maybe I should take this trade, just in case. That voice feeds on impatience. The market moves, and suddenly you feel left out, so you convince yourself that any trade is better than no trade. But the truth is, most of your money will come from not trading. The trades you skip because they don't fit your criteria, those are the trades that save your capital, your focus, and your confidence. Discipline is the weapon that cuts through noise. Every time you choose not to act on impulse, you sharpen it. Over time, you begin to notice the market more clearly. You start recognizing what real opportunity looks like. It's quiet, it's measured, and it aligns perfectly with your plan. There's no rush, no panic, no guessing. You just act when the signal is clear and stand aside when it isn't. That's how professionals operate. Noise creates movement, but not progress. It keeps traders busy but not profitable. The goal isn't to be active. The goal is to be selective. Every decision, every chart, every piece of data must earn its place in your process. If it doesn't help you act with confidence and precision, it's noise. Cut it away. You'll find that the less you listen to the market's distractions, the more clearly you can hear what it's really saying. The market has a rhythm, a pulse, a logic that only reveals itself to those who are quiet enough to notice. Most traders miss it because they're too loud in their own minds. They chase opinions instead of patterns, headlines instead of price. But once you cut the noise and focus on the essentials, price, volume, and structure, the chaos begins to fade, and what's left is opportunity, clear as day. Waiting for confirmation before committing capital is one of the hardest lessons a trader can learn, but it separates the disciplined professional from the impulsive speculator. Most traders lose money not because their analysis is wrong, but because their timing is impatient. They see what they think is the beginning of a move. They rush in early, and the market turns against them. They were right about the direction, but wrong about this moment. In trading, the moment is everything. A good idea executed at the wrong time is still a bad trade. You see, the market is a living thing. It doesn't move in straight lines. It breathes, expands, and contracts. Every move has a build-up before it breaks out. That build-up, that tension, is where confirmation comes in. A professional trader waits for the market to prove its intention. Only when price action confirms the setup does he step in with real capital. The amateur jumps in on anticipation. The professional acts on confirmation. That's the difference between gambling and trading with precision. When I was watching the tape in my early days, I learned to see confirmation in the way the ticker moved. You could feel it. The hesitation before a breakout, the pressure building in the price, the volume tightening. The tape doesn't lie. It shows you where real money is stepping in. You can't always predict what's coming, but you can see when it's happening. That's confirmation. When the market tells you, yes, the move has started. The trick is having the patience to wait for that signal instead of guessing when it might arrive. Ask yourself, how many times have you seen a clean setup, jumped in early, and then watched the market stop you out before going exactly where you thought it would? It happens to every trader at some point. That's the price of impatience. You saw the idea, but you didn't wait for the market to validate it. You wanted to be first instead of being right. The market doesn't reward speed, it rewards accuracy. Confirmation isn't about hesitation. It's about discipline. It's about letting the market reveal its hand. If a breakout is real, it will show strength. Not just a flicker, but sustained movement with volume behind it. If a reversal is genuine, it won't collapse immediately after a single candle. It will build a foundation, test the level, and then move. Your job isn't to predict that. It's to recognize it when it happens. Most traders can't wait because they fear missing out. They see price moving and think, if I don't get in now, I'll miss the whole move. But the truth is, if a move is real, there will always be a second chance to enter. The market gives confirmation to those patient enough to wait for it. You don't need to catch the first few points of a move to make a profit. It's better to come late to a confirmed trend than early to a false one. Waiting for confirmation also protects your capital. Every false breakout, every fake reversal, every deceptive candle is a trap for the impatient. The market is designed to shake out weak hands. That's why confirmation isn't just a technical rule. It's a psychological shield. It keeps you from reacting emotionally. It forces you to slow down, to watch, to listen. You start to trade with the market instead of against it. In the tape reading days, I'd often see stocks that looked ready to move but hadn't quite broken through resistance. I'd wait. Others would jump in early, certain that the breakout was coming. 9 times out of 10, the stock would stall, dip, and take them out. Then, after the weak hands were gone, the real move would begin. That's how the market operates. It punishes those who can't wait for proof. There's a kind of quiet strength in waiting for confirmation. It takes self-control to stand aside while others rush in. It takes faith in your process. You can feel the tension building inside you, that urge to act, that voice saying, just get in now, you'll regret missing it. But trading isn't about excitement. It's about execution. You have to remind yourself that no confirmation means no trade, no matter how good it looks. Think of it this way: confirmation is your insurance. It doesn't eliminate losses, but it filters out bad trades. It's the market's way of saying, no, the odds are in your favor. That's all you can ever ask for, favorable odds. Once you have that, you can commit capital with confidence. Without it, you're just guessing, and guessing has no place in serious trading. You can find confirmation in different ways depending on your style. For some, it's a break of structure on the chart. For others, it's a surge in volume, a retest that holds, or a certain candle pattern that validates the move. The specifics don't matter as much as the principle. Error, wait until the market proves you right before you risk your money. The market speaks through price and volume. When those two align, that's confirmation. The irony is that once you learn to wait for confirmation, your trading slows down, but your results accelerate. You take fewer trades, but better ones. You stop wasting time and energy on setups that never mature. You start thinking like a hunter. Quiet, still patient. You don't chase the prey, you let it come to you. That's how professionals operate. Ask yourself again, what would your results look like if you only entered trades that met every confirmation rule you set? How much frustration would disappear? How much capital would still be in your account? That's the difference patience makes. It's not about finding more opportunities, it's about waiting for the right ones to complete. Most traders think discipline is about cutting losses. That's only half true. Discipline begins before the trade ever happens, in the decision to wait for confirmation. Every time you resist the urge to jump early, you strengthen your control. You train your instincts to align with logic instead of emotion. Over time, your patience becomes automatic. You start to feel uncomfortable trading without confirmation. That's when you know you're becoming a professional. The market rewards those who respect its timing. It doesn't reveal its true direction instantly. It tests conviction first. Those who rush in without confirmation become the liquidity for those who waited. The professionals buy when the amateurs are shaken out. That's how this game works. It's not the fastest who win. It's the most patient. When you finally learn to wait for the market to show its hand before committing capital, you stop fighting against probability and start trading in harmony with it. Trading when the odds align, not when emotion tempts, is one of those principles that sounds simple but defines the entire difference between a winning trader and a losing one. Every trader thinks they make rational decisions, but the truth is, most of them are reacting to emotion, excitement, fear, frustration, or the simple urge to feel in control. The professional doesn't trade because the market moves. He trades because everything lines up. The setup, the signal, the context, and the probability. That's what Ford's alignment really means. It's about stacking the deck in your favor before you commit a single dollar. You see, the market doesn't care how you feel. It doesn't care if you're bored or eager, if you've had 3 losing trades or 5 winners in a row. The market only responds to pressure. Buying and selling, supply and demand. Your emotions have no influence on that. But if you let your emotions guide you, they'll make you act as if they do. You'll start forcing trades that don't meet your rules, taking setups that aren't quite ready, or holding on to losing positions because you feel like they'll turn around. Every one of those actions comes from emotion, not logic. And emotion is the enemy of probability. When the odds align, it means several pieces of evidence come together to tell one story. Price action confirms your direction, volume supports the move, the trend structure agrees, and your entry and stop make sense from a risk standpoint. That's when you have a high probability trade. You don't need to be perfect. You just need to act when the odds are leaning in your favor. A professional trader is like a poker player. He doesn't bet on every hand. He waits for the cards that give him statistical edge. Then he bets aggressively. The rest of the time, he folds. Most traders never learn to fold. They can't stand the silence between trades. I've seen traders lose more money in boredom than in bad analysis. They sit at their desk, waiting for something to happen. And when it doesn't, they make something happen. They convince themselves that a weak setup might still work. That's emotion pretending to be logic. You have to learn to recognize that voice inside you, the one that wants action more than accuracy. Ask yourself, how many times have you entered a trade you knew wasn't quite right, just because you didn't want to miss out? And how often did that trade end up costing you? That's emotion robbing you blind while disguising itself as intuition. The market has no mercy for emotional traders. It feeds on impatience. Every fake breakout, every false reversal, every fake rally. They're all designed to trap those who act on impulse. The crowd always trades emotionally. That's why the crowd always loses. The professional does the opposite. He waits until the evidence stacks in one direction. He doesn't care about excitement. He cares about probability. The more factors that align in his favor, the more he presses his advantage. And if they don't align, he simply waits. He knows that doing nothing is also a decision, a profitable one. Emotion tempts you in subtle ways. Sometimes it disguises itself as confidence, sometimes as hope. You might convince yourself you know the market is about to turn, or that this trade feels right. But the market doesn't reward feelings, it rewards structure. Trading when the odds align means you've checked your boxes. You've measured your risk. You've confirmed your signal.